Hello guys, this is the Maximum here once again, and I want to run a quick technical breakdown of the approach I used in calling out this trade, which I called out today, being 18th of February. This is Eurjpy 5 minutes time frame, as you can see, and during London session today, we caught this very first entry in our Telegram channel, and during as we were approaching New York session, we caught this very second entry. Now I'm gonna give you a top-down technical approach, full technical approach that I used in framing this very trade. It technically went like it was just beyond what you are just seeing right here. Now let's start from our higher time frame. Let's start from why I trusted my bias to be bullish. Why I felt like, okay, this very range that is taking place here, this very range that is situated here, was somehow going to lead to price continuing bullish. And let's go to our 4-hour time frame. So this is our 4-hour time frame. And the first thing you're gonna see here is you can see this bottom that formed here. What exactly propelled this bottom here? What made or what led to this bottom forming at this level in price? And why is it holding price and pushing price all the way to higher prices? Take a look at this very order block that is here. This is a valid order block. This is a valid order block. And beyond being just a valid order block, there is something else behind it, as you can see. Now let's go down to 1-hour time frame. Let's break down this very candle and see why I called it a valid order block. So over here on our 1-hour time frame, you can see what took place here. We had price create this low. After creating this low, it's traded down below this low, took it out and expanded to the upside impulsively. You can see this impulsive move that took place here. As it was expanding impulsively, it left series of fair value gaps. Now, I do teach my students that one of the criteria to know or to identify high probability order block is that it is going to break structure, and while it's going to be in the process of breaking structure, it is going to leave an FVG. It is going to create a gap in price, and that is just one of the criteria you're going to pay attention to when you're trying to define a high probability order block. The second criteria you should also pay attention to is if it sweeps liquidity, and that is exactly what happened here. You can see this very series of bearish candles here, which is the 4-hour time frame order block, which is the entirety of this range. You can see where it swept this clean low here and started moving to the upside. Now, another thing that also served as a very, very strong confluence that made me to believe, okay, that's low. I mean, as price, came down to this low, it was just gonna, hold price. It's something that, I barely talk about, one of my secret sauce, and that is opening price. Take a look at this very first bearish candle here. That was the opening price. This very bearish candle here. That was the opening price of the week on a certain period. And that was specifically 7th of December 2025. So this is the opening price of 7th of December 2025, which took place on a Sunday. This is the opening new week. This is kind of more of like a new week opening price. Let's get that labeled. New week opening price. So after that got created in price never came back to mitigate this opening price, this new week opening price ever again, until several weeks went by. As you can see, several weeks went by and price finally retraced back into this very range in price. And don't forget, long term, this very pair has actually been very bullish, as you can see. It has just been in bullish trend, regardless of the fact that we have seen some sort of structural change, but then we could still consider this to be a bullish market because we've not seen continuation of like a very, very strong continuation of bearish momentum, apart from this very two that took place here, this one here, and this one that just took place impulsively and managed to break structure to the downside. But like I mean, anything is still possible. Probably will switch trend, or we could still remain bullish. But who cares? We're not trying to catch the entirety of the range, so we're just gonna, snipe in, get our deliberate, boom, I'm out of the market. So this is basically how I was able to trust this level in price to propel price to the upside. Now let's go down to how I was able to scale in today during long session. So as you can see, while price opened today, being on Wednesday, 18th Wednesday, 2026, you can see the opening price. Pay attention. This is the opening price. You can see this bullish candle I'm pointing at right here. The bottom of this bullish candle is our opening price for the day. And look at exactly what price is. As the market opened for the day, we started trading to the downside. And there is this thing that I believe that if we're going to have a bullish week, or if we're going to have a bullish day, or a bullish, what is it called? Whatever in price, if we're going to have a bullish, probably bullish candle in a higher time frame, we should first expect price to sell. And the opposite is still the case. If you're expecting a bearish momentum in the market or in price, you should expect some sort of bullish manipulation first before continuation of lower prices. And that was exactly the logic I applied here. All I did was to, okay, after price opened, knew the opening price, we started seeing, retracements that led to this very low being taken. So I considered this to be some sort of liquidity grab, which took place towards London sessions opening. Now, after we took that low out, and as a matter of fact, we did not just take the low out, we actually traded into an order block. If you pay attention to the previous definition I gave you just a few seconds or a few minutes ago, this could as well be considered to be a high probability order block to some extent. So after price traded into this very order block, we started seeing higher prices. Now, we had this higher price trade up here, taking out this very, and see, just a little bit, just this tiny wick here, wicked out this very high. And this, to me, I consider it to be some sort of structural shift. Or you can just decide to, okay, there are lots of structural shifts that took place here. You can consider this to be a structural shift. Some people could as well consider this to be a structural shift to the upside. I mean, it's not that deep. You feel me? So after we had this structural shift, what else happened? We had a retracement. A retracement below the opening price of the day into the discount array of this very range, from this very low to this very high. I consider this to be a range. So we just had price traded below the opening price and into the discount array of the range. Now let's place our fib to be certain. As you can see, price traded below the 50%, which is the equilibrium of the range. So anything below the 50%, we consider that to be our discount level and price. And that was where I got my entry. And now, of course, I posted it my Telegram, and some of my boys, they made crazy money alongside, just like as I did. That was how we just held price, held held the market and took out this very level during the opening price. As we had this very price traded above the opening price, somehow retraced back into it. You feel me? I was certain that, okay, we are bullish because we successfully had a structure, we successfully had some sort of break and retest in this level. And it did not just happen there. This was just some sort of, okay, a break and retest in, let's say, a minute's time frame, 1 minute time frame. That's where you're going to go and you see proper definition right there. But like we continued moving higher, took out this very high here, which was some level of liquidity because some traders that were probably selling at these levels, they placed their stop losses here. So the market just took their stop losses, retraced back to my opening price, which I as well anticipated it to come back to for continuation of higher prices. And that was how I ended up having this very second entry and place the stop loss here, and boom, it was just that basic and simple. So this is basically how, like, let's say the 60% thought process, 6% logic of how I was able to scale into this very trade. Now, if this is the first time you're coming across my contents, do yourself a favor, make sure you like and subscribe. And if you've got questions, you can drop in the comment sections and I'll do well to, do justice to all that. Peace out, guys.